Imagine checking your phone and seeing your investments grow, giving you a sense of freedom and possibility. The stock market can seem intimidating, but it's just a tool to build wealth over time. Let's break down what the stock market is and how you, as a beginner, can start investing today. The stock market is like a giant marketplace where people buy and sell pieces of companies. These pieces are called stocks or shares, representing ownership in businesses like Apple or Tesla. When you buy a stock, you're betting on that company's future success. Think of it like owning a tiny slice of a pizza chain. If the chain grows, your slice becomes more valuable. If it struggles, your slice might lose value. Stocks are the heart of the market, but there's another option: ETFs. ETFs, or exchange-traded funds, are baskets of stocks you can buy all at once. They're like a pre-made pizza with a mix of flavors, reducing risk. For example, an S&P 500 ETF holds shares in 500 big companies. Instead of picking one stock, you spread your money across many. This makes ETFs a great starting point for beginners. Now, how do you actually invest? You'll need a broker, which is like your gateway to the market. Brokers are apps or platforms like Fidelity or Robinhood, where you buy and sell stocks or ETFs. Picture a broker as a ticket booth at a fair. You pay a small fee, or sometimes nothing, to get in and trade. Choose a broker with low fees and an easy-to-use app. Setting up a brokerage account is simple. You sign up online, link your bank, and deposit money to invest. Most brokers let you start with as little as $100. Once your account is ready, it's time to pick your first investment. Research a company you know, like one you buy for regularly. Check if it's growing or has a solid track record. ETFs are often safer for beginners than single stocks. An ETF like VOO tracks the S&P 500 and grows with the overall market. It's a low-stress way to dip your toes in. Before investing, set a goal. Are you saving for a house, retirement, or a dream trip? Your goal helps you decide how much to invest and for how long. Start small, maybe $50 a month. Consistency matters more than the amount. Over time, your investments grow through something called compound interest. Compound interest is like a snowball rolling downhill. The longer it rolls, the bigger it gets. Investing early gives your money more time to grow. Don't try to time the market. It's nearly impossible to predict. Instead, invest regularly, no matter if prices are up or down. This strategy, called dollar-cost averaging, smooths out risks. Let's pause and reflect. What's one company or ETF you're curious about? Maybe it's a brand you love or a fund you've heard about. That curiosity is your first step. Here's a quick example to bring it together. Say you have $200 to invest monthly. You put $150 in an S&P 500 ETF and $50 in a company like Nike. Check your investments once a month, but don't obsess. Markets go up and down, but long-term growth is the goal. Stay patient and avoid selling in a panic. Investing isn't about getting rich quick. It's about building wealth steadily over years. Small, consistent steps today can lead to big results tomorrow. If this feels exciting, join our WealthBit Grow community. Drop a like, subscribe, and share in the comments one stock or ETF you want to explore. Your ideas spark inspiration for others. Picture yourself 5 years from now with a growing portfolio. That's the power of starting now, even with a little. Investing is your path to financial possibility. The stock market isn't a mystery, it's a tool. Start with a broker, pick an ETF, and invest regularly. Take that first step today and watch your wealth grow.